Welcome back. A little FOMC meeting is still happening, and I think Powell's wrapping up the press conference here. A lot of noise. Started out to be a pretty aggressive move to the downside. We came right down to our positive negative gamma pivot at 68.60 and 68.50. We called those levels this morning in the daily profit plan session. Turns out to be a noisy day because we came down to test those levels, bounced right back up. We're going to see where the dust settles for the rest of the hour when the market is here in about 54 minutes. Mag 7 earnings on tap. We have Meta, Microsoft, Google after hours today. We have Apple, Amazon Thursday after close, along with MicroStrategy and some other ones. This is post FOMC. So here is the price action that we were dealing with this morning. We said it this morning. I've got to ask if I've got any traders out there that are still in the daily profit play. I didn't take a daily profit play this morning because either one, you're going to sit and wait all day and hope for no volatility. Or two is you got into the trade, you see this big move to the downside that threatens your position, and now it comes right back up to be hopefully in profit. I would imagine if you're in it, it's still looking like a good day because for the most part, the market hasn't gone anywhere. We're only showing about a 20-point move, and your daily profit play standard should have been somewhere like 30, 35 points out of the money, and looking like it's pretty good and pretty centered. So I do have a couple of trades. Let's see if I can find my drawing tool here. It's not going to let me annotate. Anyway, I do have a trade that is pending with a 69.24. I'm looking for a broke wing butterfly to see if I can get something filled at $1 credit up here at this 50% ATR. I also have one down here just below the 100% ATR in case we break the lows for the remainder of the day. So both of those trades, by the way, might not get filled. We might just end up going down with an aggressive move, coming right back to kind of neutralize that aggressive breakout and finish, right in between. And it's just a noisy day. Market makers had a plus or minus 30 on the day. So here's where we opened around 11. If we're inside that 30-point move, market makers did their thing, even with FOMC volatility, right? So we'll see. For the next 52 minutes, are we going to retest any highs? Are we going to get back to fresh highs on the day? Market shrugs it off with aggressive zero DT buying right at that positive gamma. Or are we going to come back down and maybe retest the lows and possibly come in to make some fresh lows? So either nothing happens and we just get a bunch of noise here for the next 50 minutes, or maybe the market's going to try to test. And I want to keep an eye and see what happens. So a couple pending orders, but we'll see. But I was kind of tracking this in real time during the FOMC. I posted this in my Telegram. So we had this trade earlier. When we took the trade this morning, I drew this yellow box. We did a 68.50 pin price. And lo and behold, we had price coming down today to 68.51. Where'd I pull that number from? From my software. I have this stuff. Okay. So I can make pretty good educated decisions on where things can go. It was a very cost-effective trade. The trade was max risk of $1.05. I closed it out for $1 profit. So I got about 92 to 95% return on risk. If you had held it a little bit longer through these couple of candles here, it was offering as much as like a 1750 debit. So if you do the math on that, 1895 minus I'm at 1650, sorry. So 1650 debit, 245 out of a 105 cost. I mean, there's over 200% profit return on risk today. So a couple ways to manage some trades, manage some profit. If you're in the trade now, it is trading for still profit. I mean, you can still get about $1 out of the trade, which is where I closed it out. But we want to keep an eye on that. Okay, so we'll see what happens. Like I said, either nothing for the remaining 50 minutes of the day, or possibly we break some fresh lows. I think the big trigger today for the market, at least this initial sell-off, was that December is not a foregone conclusion for rate cut, which means the Fed is split and divided, possibly seeing that there's not a guarantee they're going to cut rates in December. Now, I want to see where the CME watch tool takes the Fed December probabilities, because from what we saw earlier in the week, that was a very high probability. If I go to the watch tool right now, if this loads up, this wasn't loading earlier today. There we go. So now we are seeing that the probability for December, so they cut rates today. It was 90+% probability. So it did, in fact, do that today. And they cut. So that's official. And then December, if I'm not mistaken, I could have swore that I saw December up to like 80% or maybe higher. And now it's been shifted down to about 67. It still looks like the market's anticipating a rate cut for December. But maybe, okay, we did September. Now we did October. December, January, well, I should say Q, maybe April. It's still questionable whether we get 5 or 6 total. That's just a big pause from basically summer of 2026 to the end of the year. So that's where the Fed stops. Now, one thing I want to be watching, let's take a look at a little bit of everything today. So markets, quick snapshot is this. I'm gonna build like a workspace that just has all the assets on the smaller time frames. SPX is kind of flat for the day, but was down, like 0.3, 0.4% on the sell off. Let's take a look at this intraday. So for the intraday pricing, we were up. Markets fell as much as 0.8% from the open today. So that's a pretty aggressive sell off. We've obviously recovered very quickly from that bottom. And again, this isn't by accident, but we called this level this morning. Okay. We said that if prices come down to 68.60, that's the positive negative gamma pivot point. I had a gamma level down here at 68.50. I did say also that this happens during FOMC days where we have the market's ability to test them highs, test lows, and finish somewhere in the middle and just ultimately be noisy. Okay. That is excellent there, Larry. Larry got out at 1675 debit. Awesome stuff. 225% return. That's what I like to hear, man. That's great. And then a 6800 by 6790. What'd you get filled on that for, by the way? If you did the 6800, that's quite a bit out of the money. What'd you take on that trade? I'm just curious. I mean, 10 wide. I'm hoping you got at least over $1 for it. But good stuff, man. Great day for Larry. Yep. So there's our sell off. Came down to hit support. We're back into positive gamma territory. You're going to see, aggressive option flows throughout the day. Aggressive option flows to the downside, and then picking right back up at that positive gamma, right at that pivot point, and then kind of stabilizing the market. This continues to do some pretty amazing things. Like even during crazy events like FOMC, even during Mag 7 earnings and what have you, the markets and indexes still have to have some semblance of efficiency, and that is one of the hallmarks of trading options, especially if you like to sell options, is you've got to believe in market efficiency, and we do have a lot of it. And today's a good example of that. Okay, $1.10 on that. Okay, good stuff, man. How's it looking right now in the final 45 minutes? Because I'm imagining that you got filled on that trade, into the sell off, and right now that's got to be trading for some pennies on the dollar, right? What? $1.30? That's crazy. Dollar? No way, dude. 68 by 67.90. I can't. I'm showing 5 cents on that trade, man. 6,800 by 67.90 for today. That's trading for like 10 cents. I think you should be able to get most of that profit out of the trade. So I'm showing 10, 15 cents on that right now. Nope. Okay. Well, I mean, the probability of profit's like 98% in the final, 45 minutes. We have a market maker move of about 17 points. Okay. Anyway, I hope it's a win. We'll find out at the top of the hour, right? But good stuff. Okay. So we'll see where the dust settles. Oh, you did tomorrow. Well, there's a big difference there. Well, if it was my trade and I did tomorrow an accident, I'd probably throw it in for break even. Or obviously it's not the trade you want. There's $890 risk on that trade, or yeah, you got filled for 110, so you have $890 risk on that trade. I would take. I don't know how many contracts you did, but if it was, I don't want to take that risk, then close it out. It's going to be a small loss, I guess, but more manageable than taking on the heat if something happens tomorrow that you don't like, i.e., price comes back below 6,800, right? So there's still some wiggle room. I mean, look at the option chain for tomorrow. So for the 30th, I mean, right now the 6,800 strike is an 18 delta. That's a pretty routine put. I mean, we'd like to spend a lot of time in that 15 delta range. So mechanically speaking, as long as Mag 7 is pretty solid tomorrow, I would imagine it's honestly like it's okay. Probability wise, it's okay. That's an 18 delta going into tomorrow. Okay, let me see how my little bonus broken wing butterfly is doing right here. It's now up about $35. Okay. about 40 bucks. If this gets up, so max profit here is the $1.35. If I'm up over 100 bucks, I'm going to close this thing out. So watch that one. We closed out the Iron Fly. Good. Okay. So I'm going to set a chart alarm. I've got a pin price at 25. It is 25. Yep. So a 25 and a 6,800. So 25 up here and a 6,800 down here. I don't know if either of those levels get filled, but I have a broke wing butterfly kind of waiting to see. So if we are going to see prices falling to lows, does it fall to fresh lows? Maybe. We'll find out. Does it come back up and just stabilize for the day? The plus minus on the day, like I said, it was around 30 to 35 points. We're right there. We opened at 69.10. We are sitting at 80. So you're talking 30 points. So if the market makers do their job, then we should be closing higher than current price. Okay. If they don't do their job, then this rolls a little bit lower and they're probably taking that risk into tomorrow. The key level to watch, in my opinion, is as we come into tomorrow's trading. I mean, tomorrow's a brand new day, but if we're below 68.60, that potentially pushes us into negative gamma territory. If we look at the live prices right now for 0 DTE, we are starting to fill back up around that 68.50 zone. So it is possible that we may start to fill this gamma back up to the downside and get a test. But it was a poke at 51. That candle low was 51.91. So if it comes down to retest that, maybe we spend some time hanging out here. I thought the market was, a little overcooked and possibly due for a correction anyway, at least in the short term. So I'm watching to see how that plays out. Okay. Is today just another, high to low for 1% for the market to buy the immediate dip? The market had a 1% correction from high to low today. I mean, maybe not. I think 1% is still very shallow. So, I mean, I wouldn't mind seeing prices somehow fill some gaps here in the last few days. We've had gap ups, come back to find the 21-day moving average. This little blow off top with some divergence, maybe pulling back to that 50-day for the first time in 120 some bars. Okay, so we'll keep an eye on that. All right, what else is going on? Let's take a look. So that's SPX down 0.2%. NASDAQ is clinging to positive gains. I looked at so if you're in my daily profit plan, we did put in a bonus trade for a broke wing butterfly on the SPX. I actually priced out something similar on the NDX. I like the trade, but it's a lot of risk, so I didn't take it. The risk was like $2,300 to make about $2. So not worth it, even though the profit trap was a $2,500 profit trap. I don't mind that trade, but the profit trap, if I'm obviously taking on risk, then that's the problem. So I was looking to see like where I could put my deltas. I'm not going to take the trade. It's flat out like, okay, if we have Mag 7, if we pump up, if the market squeezes higher, it's like, I don't want to get burned on the upside risk. So I'm going to pass on the trade. Plus it was wider than I wanted. Anyway, NASDAQ is still clinging to positive territory. Today we're at 0.16, Qs are up 0.17. Dow is down along with the S&P. S&P down about 0.16. Dow is down 0.25. Russell down 0.86. VIX has been kind of a roller coaster ride today. VIX has been up on the day as high as 17.5. Now it's down to 17. We started in the like lows, right? We started around like 16 today, 16.4, 16.6 or something on the VIX this morning. So pretty noisy VIX. Let's see here. What else? I'll go back to the VIX here. Let's go bond volatility. Bond volatility down. Dollar index catching a pretty nice bid today. I said that the dollar looks better to the upside than the downside for me. Oil, nice bounce off of the 55 support, possibly heading back up into maybe low 60s, maybe $65 resistance. This does seem to be like a pretty good low to high in oil. Gold, actually natural gas, still not moving much. I've got natural gas positions out to 2027. Gold, down below the 21 moving average. I'd like there to be more gold corrections. I still think that I mentioned this in the last segment I was on. If we go high, low, back to the same highs again, I think this just consolidates and you look for a range to trade. Okay. That's one possibility. So don't expect gold just to continue to run to the upside. The other possibility is that we go high, low, a little consolidation here, one more push lower to find these moving averages. We are over 500 bars removed from the 200 moving average. We've had one of the biggest bull runs we've seen in a long, long time on gold. I think the 200 period gets hit, and either we get hit with a period of consolidation in gold, or we get hit by price continuing to slide lower. That what looks to be kind of parabolic and very one-sided might just completely come back in and revisit all of that and take away all of those gains. But I'm going to be buying dips there and looking at a position for gold to continue to go higher. So I hope there's more downside in gold. I just don't know if it's going to be a couple of different scenarios. High, low, consolidation, lower, low, or if it is high, low, lower, high, lower, low for maybe like a wave structure here until we hit that 200 moving average, or high, low, comes right back up to the highs again, consolidates, and then my moving averages catch up. And eventually it finds a floor, we find support, and it's off and running again. So maybe a pretty tame, maybe all we get is like a 10% pullback. I think that has some kind of big consequences. That's all we see on gold. That just be prepared for like a insane bull rally to continue if we're not really pulling back more than 10%. On a 50% rally, we're only pulling back 10%. That's a lot of gold love out there in the markets. Silver, we pulled back, I think 15 or 16% from highs to low. Same type of thing. We're down 16%. It's down less than that with this little bounce off it, but we're between the 21 and the 50-day moving averages. Same type of thing. Are we going to go high, low, lower high, lower low? I do like that potential play out. Or is it a high, low consolidation, maybe a fake out to the downside, then back up to the highs, watching for more dynamic support in here. This one doesn't have the same type of bar count stuff like I see on gold. Okay, I still like both of them. Now that we've reached all-time highs in silver, I'm hoping that we can stay there. I mean, maybe silver above 50 is open space, and we can talk silver in the next few years at $100, $150, $200. Who knows? But I am looking to use dynamic support to stay in a bull market. I think that silver looks good in this bull market. Stay bullish. All these support levels all the way down to like, this is spot price silver all the way down to like $40, $37 or so. Even if we came back to previous highs at $35, I'm still bullish on silver. Okay. Bitcoin turned red. Last couple of days, we sold off a little bit. We're at 111. Still a lot of potential accumulation. If it gets kind of nasty out there for Bitcoin, it might be a high, low, lower high, lower low. I still think this is an opportunity to buy the dip. This is a strong multi-year trend line support. Do we hold this level and head back up? We might not even come down that low, right? We might spend more time doing this, which is just consolidating, and we have a broadening pattern, right? We can consolidate for a while. Eventually, when this breaks, I'll measure the move, and we're talking, if we go all-time highs, we're probably pushing like 135, 140 on a breakout move like that. So we'll see. But definitely prepared for some downside here until like the sub 100K to 90K. Price could come back that way, and it still shows some pretty good support, but it's going to be a little bit more volatile. I'm curious what that looks like on the dollar index, or looks like on gold and silver. If Bitcoin falls another, peak to trough, it'd be about 30%. That'd be a correction of about 31%. Okay, what else? Ethereum pulling back, MicroStrategy off of Bitcoin, Coinbase, noisy, copper. I really wanted to trade copper. The 111 was such a bad trade in copper futures. I didn't like the reward to risk, so I didn't take it. But anyway, it is what it is. Copper's off the lows. Japanese yen, let's go. See, Swiss franc, 6J Japanese yen futures. I will probably add some more exposure to this. If we are down into these lows, which are back in like 2024, I'll probably take some Japanese yen futures trades. The Nikkei, wow, this thing is running hot. Wow, Nikkei up to fresh highs. That should help my EWJ positions. You see if I let those go or I still closed them. Or did I close them or I kept them running? Let's go EWJ. I still have it running. So I've got about $6,600 on EWJ. Um, Not bad. So what to do here on the old EWJ? It's up. I guess I'll hang on to this a little bit longer. DAX sideways at these recent highs. FTSE, wow, big run in the UK. I thought DAX was a better looking instrument. FTSE is still showing a lot of resiliency and bouncing aggressively off of your moving averages. 21s and 50s looking pretty good on the FTSE. Argentina, I guess thanks to a bailout, we've got the Argentina. I mean, that is kind of disappointing. What a good spot though. If you bought the ETF at lows in April, great spot to buy this thing 70 up to 92. That's a pretty instant return. Nothing like catching up with a 34% gain on a bailout, like instant gratification within maybe a couple of months. Crazy. I didn't take the trade. I obviously wish I would have, but 70 to 92 feels pretty good in about a month. I would, if I was in the trade, I'd literally be closing. Like that's such a ridiculous push. Maybe there's more to it. Maybe it's just getting started. But if we have a gap fill, then I'd be happy to be out. Brazil making some fresh highs, which I like. Latin America making some fresh highs, which I like. I'm long on both of those. Mags are up to some highs. We have our Mag 7, of course, for tomorrow. Tomorrow is going to be Meta, Microsoft, and Google. So Google like some fresh all-time highs. Meta sideways with earnings. I did close out a small win on a trade I took Monday for the Gamma report. I did a 7. It was a 745 by 747.50. And I closed out for like a $20 winner. Microsoft, we actually gapped up today near the highs. We have earnings after market today. I don't have anything running on Microsoft. So let me see if I have any shares. I don't think that I do. Google, I have ratio spreads in this one. So this is protected puts. I closed out my ratio spreads on Project Options Edge. Meta, I'm pretty sure I'm out of everything. Yes. And Microsoft, out of everything. Okay. So I've closed out all of those positions. So no exposure for me on the Mag 7 earnings. Netflix, we do have some pending orders and newsbreakers. I'll keep an eye on those. I have a pending order in Netflix if we come down to like the 1080, 1075 zone. NVIDIA, I close out for a winner today. We took about what was the winner today? Like 15, 16% pinch point. NVIDIA, we closed out for a 15% winner today. I just took the profit. We had the expiration out to December, just in case this pulls back and stays more within the range of the expected move. Look, we had a nice solid breakout with a pinch point scanner. So we were consolidating. That's why we took the trade. We've had a nice run to the upside. So I'm taking the profit. Okay, Tesla up to 460. I've got a chart alarm set just at these highs. I'd be curious to see if Tesla has another. I mean, we had earnings on Tesla. Are we going to see Tesla melting up into the end of the year? I would consider closing some exposure that I do have on Tesla up to $500. I bought shares during all the chaos back in March and April, and I've held some of those shares with covered calls that are now in the money at like 260, 270, 280. I've generated $5,000, $6,000, $7,000 on those positions. I also bought shares in the back on the right side of this trend line around 290. Those are running uncovered. So buying shares at 289 to 290 up to now 460. It's like that's a pretty good chunk. If we can break through this high, I'm going to close out those shares at $500+ and then start to do some more option trading. I do have a lot of ratio spreads. I've got a lot of naked puts on Tesla that are all the way down here towards like the 250 zone, 230 zone, 200 zone. And those are looking pretty good for profit. I'll show you that right here. So Tesla, here's an example. So I have some shares, covered call, bull put spread, ratio spread. Between this 600, I mean, that's a good chunk of profit. So if we went to 621 plus 663 plus 370 plus 540 plus the shares, so 2194 in profit. You can see right now it's like I've got 25K in profit, and I've got another maybe $2,100 to add to it. So, pretty active on Tesla. It's been a good premium generator for me, as well as a great mover. Obviously, like price has gone up really nicely. I missed Nvidia. Okay. Yeah, we'll see. I mean, we have earnings out to November. That pinch point trade was out to December. So all we need to do is see Nvidia continue to push highs. And, if the market's going to hit all time highs for the year and continue to float higher, I think it's still going to get higher. I mean, the demand seems insatiable. It's like everyone is booking crazy amounts of demand. Everyone wants Nvidia chips. I think the demand is all, it's like out to like the end of 2026, 2027. A lot of the orders and pre-orders, it's like 1 or 2 years still of like just crazy demand. So Nvidia is a huge beneficiary of what's going on right now. Can you share your trading view watch list? Can I do that? I've just built this manually over the years. I don't know how to share the whole watch list. Does anybody know how? I mean, it's kind of my top down. I go indexes, so anything S&P futures, SPY, Nasdaq futures, QQQ, Dow futures, DIA, right? Russell futures, IWM. Then I've got Russell growth and Russell value. Then I have some non-US stuff, China, India, Latin America, Japan, UK, Europe. So I'm just thinking like that's macro stuff. Then I go into currencies. Then I go into stocks. I don't have a ton of stocks in here. I probably have like maybe 50 between Mag 7 and some of the big like liquid names. Top 25, top 50. I've kind of focused my portfolio a lot of years on kind of focusing on those. They're top 25 for a reason. They're top 50 for a reason. They're usually nice and liquid, easy to trade options on. So, and then I put in all 28 currency pairs. So I don't think I can actually share my watch list, but that's kind of the makeup of it. And I've got some, data stuff in here like the market breadth indicators. I've got US 10-year yields and some bond stuff, bond futures, some futures elsewhere, like, corn futures, wheat futures, palladium, platinum, gold, silver, oil, right? I mean, it's nothing crazy. You can go through and build this watch list in, 10 minutes. So if I could share it, I will. I just don't know how. All right, let's take a look and see. We've got about 27 minutes left for the day. Looks like we're staying a little bit noisy. The market makers have not quite done the open. I mean, this is now down 40 points for the day. So this is a little bit beyond the market maker move. We'll see if this stays kind of choppy here, maybe pulls up again to eat into this full sell-off candle. If it goes down to retest the lows, market makers did not do their job for the day. Didn't matter to us because we still made money. But I'm curious how the day settles. I mean, this is still my largest gamma level, around 68.50. If we get into negative gamma to close out the day, I think it's important to watch futures for tomorrow. Okay. So we will see if futures tomorrow coming into earnings. We also have Mag 7 earnings. We'll see if they're solid. We'll see if they'll move the market back up tomorrow, or if it's just a bunch of noise. But I'm hoping that broken wing butterfly that we took at the I've got a couple of them, I believe. Let me double check that. So I did this one. That's the one I did for the final hour yesterday. That's it. I thought I took another one. 40, 50. Maybe I was pricing out like the 25 by 30. Yeah, I think I just took this. So 40, 50, 70 for $1.35. It's up $40 right now. I could have swore I took another trade. That is this is a waterfall strategy 2 that we did this week. Look at this one. Waterfall strategy 2 November. This one's already up. Oh, wait, never mind. Sorry. Where is that? Not this one. That's up 47%. This one that just opened 2 days ago. Okay, so it's actually flat. Never mind. All right. I thought for a second, I was like, we took that for 50 cents. It's already showing profit. Nope, it's break. It's like down $10. Anyway, this trade looking good for some full profit. We're up 97% of that credit. This one's up 64%, 64%, 63, 82%, 71%, 61%, 50%. So, I mean, still looking good on building those positions out. SLV, watching. Dividend growth, I'm looking for that one. That's more of the value plays. I'm carrying those into 2026. All right. Let's keep an eye on this stuff. So let me check and see how the old Iron Butterfly is offering trades now. It's going to be close. There it is. Now it's offering. So we're at what 65. We need, and this is offering some real money here. Now it's down to 1450. Update this in Telegram. Update 3:36 p.m. Eastern time. Trading for under $15 debit. It's pretty good. So that would be up to 395 profit out of a 105 risk. That's a 376% return on risk today. Not too shabby. Not too shabby. This doesn't happen by accident, folks. Good stuff. So yeah, let me see. Let me see if I can do that. So here, sharing. Let me see if this will work. So this is the Pulver report, trading view, watch list. See if that link works. Actually, that's I don't know if that's my layout that I'm sharing or if that's my watch list that I'm sharing. But hopefully it's something you can use. Okay. Wow, that was quick. Below 15, now it's back to 16. Still, take the profit, man. Don't be greedy. Take the profit. If you're up, $100, $200, $300, take the profit. It's way more profit on the day than what our risk was. Take it. It's a good trade. Okay. All right. What else should we chat about? Let's take a look at currencies. We had a pretty big rip on the dollar post FOMC. Dollar is up. CAD is up with it. CAD's been kind of steady through the morning. Aussie came down. Dollar had a big run to the top of the food chain today. Pound and Swiss were weaker. Was kind of nice to see some Swiss currency pairs moving a little bit softer. So Aussie Swiss starting to make some headway. I would love to see this thing get back up to 5,500 or so, maybe higher. The CAD Swiss finally starting to make what looks to be a better pattern. Man, I would be thrilled to see some type of 3 to 5 wave move up into something I can measure, past support, become a resistance. My break even on CAD Swiss is like 5,800. So if I can get this thing closer to like 6,000, all the way back here to this level around 60.50, I'm taking some profit on CAD Swiss. Swiss yen, not ready yet, but I'm watching to see if we roll over on the trend line, get a nice pattern to sell. Euro Swiss bouncing nicely off the lows. I put a double bottom trade in around 9,200 that got filled. Pound Swiss, I'm still long. It's it's a waiting game. I didn't think the Pound Swiss would take out this level. I talked about this a couple weeks ago when I posted the trade. I'm long at 107. I'm long with a small position, and I haven't added to it yet, but I'm going to go 107. My 105 didn't get filled. I have a 107, 105, 102.50, and a 100, like literally parity. And all I'm looking for is something where if we carve out a bottom, 1, 2, 3 wave move. So 1, 2, 3 wave move, even a 5 wave move. I think we hopefully end up pulling back into this inefficiency zone around like 111 to 112. That's what I'm trying to trade it to. New Zealand Swiss off the lows a little bit better, but still hasn't broken any major trend lines. So I want to watch this one carefully. Again, looking for like a 3 to 5 wave move. Dollar Swiss better, right side of the trend line. Is this finally going to start coming back to like 85, maybe up into this pocket at 86 or 87? I'm long for that. Some of the other currency pairs, I'm still long Aussie CAD. I'm long in this one towards 93.50. Aussie yen, no trade. Aussie New Zealand. I'm still short in this one. My second level didn't get filled yet. I'm looking to see if this level carves out resistance and then falls. I'm going to stay short in this one for defined risk trade. Aussie dollar. I mean, if we pull back, fine. I'm still scaling in long Aussie dollar into here. CAD yen, no trade. Swiss yen, if it rolls over for a pattern, I'll take it. Euro Aussie, nothing. Euro CAD. I mean, finally rolling over a little bit. I think this is also it's just been oil long has been helpful. We're getting a nice little boost in the CAD recently, which has been pretty good the last week or so. Euro pounds moving higher. I don't have anything on the euro pound other than my robot trades. Euro yen, very similar to Swiss yen. If we break this trend line, sweep these lows, then I'm looking for a topping pattern to then short. I like Swiss yen better because of interest rates. Interest rates are 0 on the Swiss, 0.5 positive on the yen. That's a positive swap sell trade. Add alert on the list, clear list, create new list, import list, open list, share list. Here you go. Copy link. That should work. Euro dollar. If dollar gets stronger, there's still plenty of room. This is a big channel. Look at this dollar index in euro dollar. If we see dollar strength, euro could fall as much as 106. I don't know if that's going to happen. We still have a lot of good support here around like the 113, 114 area. But if it falls lower, we cut through like the halfway point of this channel, then big support at 106, 105. I wouldn't really want to be holding this thing. So if I was going to be buying down here, I'd want to be stopping out immediately if I'm wrong, right? But I don't know if the dollar just pulls back. This is 112 resistance. This 112 area could be pretty good support. We might bounce at 112, head back higher. I'm not sure yet. But again, maybe this channel is incorrect. But I think we are possibly still well supported around the 112 handle. Pound Aussie. Wow. That was not what I expected. Pound has been really weak. Pound's been very weak. Pound CAD, big. Wow. Crazy, dude. I didn't take this trade. I'd said if you wanted to sell pound CAD, 8,800 looks like a pretty good level. Stop loss above the 9,000 handle. And wow, did that cooperate? From 88 down to 83 and change. Almost a 500 pip move. Crazy. Pound yen, meh. Pound New Zealand, big. Look at that thing. Oh, baby. That is fantastic. 2.35. It's a 700 pip drop on the pound New Zealand. Pound dollar still rolling over. New Zealand CAD. Slowly and surely, I'm building up these small positions. I'm in the 382 pullback, and now I'm in the 5.5 pullback. I went a little bit deeper. That's kind of my sweet spot between the 50% pullback and the 61% pullback. I tend to put in a 5.5 a lot of times on swing trades. So I'm in at the 382 and the 5.5, which is not a fib level. It's just a retracement level. But I'm looking to scale in again all the way down to the lows and just trade this as a range. But I'll see if this is ultimately a low, high, higher low, and this maybe pushes up to symmetry. New Zealand Swiss going to look to see if this turns a corner, gets to a 3-wave, 5-wave bullish move. New Zealand yen, no trade. New Zealand dollar, still a little bit softer, willing to scale into this one. If we maybe come down to test the lows around 5,500 and then break this trend line, buying over here, stop loss below, take it back up towards 61. I want to see some confirmation. Dollar CAD, staying under this one for right now. I'll sell dollar CAD if we come up to like 4,500. We come up to like 44, 4,500. I'll look to sell dollar CAD, take it back down. If we come down to 3,300, 3,400, I'll start buying small. So it's in the middle where I just don't like where it is. I'm not going to trade it. Dollar Swiss, I want to see if we can get up to this 200 moving average and then start getting some patterns in. 3 to 5 wave move up to like 86 or 8,700. Dollar yen. I think this is a wait and see channel. We got to see if the Bank of Japan is going to do something silly and crazy. Maybe we start to see the Japanese yen get weak enough where it comes all the way back to these highs, and then it gets very strong if we have some risk off trading in the near future. I don't know yet, but we'll find out. Okay. What else is going on? Cape, Schiller price to earnings. This is PE ratio month by month. Let's see. Where's my value? So my line graph, change this to bars, area. There we go. So our Schiller ratio is 41.18. Take this all the way back to 1999. Just getting some reference points on everyone's talking about, oh, it's a bubble. Oh, yeah, we're getting there. Schiller ratios are getting very high. This is the ratio by year. Go back to your .com, same type of thing. 44. It's like we're close. It doesn't mean that the market has to topple over. It just means that we've got to be mindful that, are these valuations justified? Does the market need a deleveraging? Okay. Here is S&P versus gold. Gold's obviously taken a pretty big correction, so S&P has jumped up. NASDAQ versus gold, same thing here. So gold dropped, NASDAQ up to fresh highs. SPX or S&P versus Bitcoin. S&P has gained on Bitcoin. NASDAQ versus Bitcoin gained. So we've seen gold down recently, silver down recently, Bitcoin down recently. S&P has gained all-time highs. Market weighted. Ives, this thing, I'll put this back to a daily candle. It's not a bad jump right out of the gates, huh? You want to get involved with Dan Ives and the AI chase? There's 38% since inception. This ETF launched around June. So I thought that was interesting. XLG. This is S&P top 50. I kind of like this from Invesco. This is a pretty good, I've traded this one for a while because I like to participate in the, top 10, top 25, top 50. From the low to high, this thing's up 53%. That is way better than the S&P. If you go to the SPY, from the bottom, it's up around 42%. Okay, participating in the top 50, you're up a little bit higher. It's pretty good. So anyway, food for thought. Do I still like this one? Yeah, if we pull back, I want pullbacks. I still want pullbacks. I want to hit some 50-period moving averages. I want to hit some freaking moving averages. I want some support in here somewhere. It's been a crazy aggressive market this year. Okay. Let's see here. Fund Strat. Can't remember. I listened to a podcast where somebody had launched this one. Fund Strat is this Tom Lee? I think this is Tom Lee. Oklo. I still have some ratio spreads on Oklo. Maybe I closed them out already. Yep. So I closed out those. Aerospace defense. Zoom. PayPal had a big jump this week. It's faded most of it. So everyone got all excited. Came right back down. So it was up $10, dropped $10. Still, PayPal's not bad as long as we're staying above like $60. I think I do have a trade on here, or maybe I got paid on it. PayPal is close for profit. That would have been a trade we took on Project Options Edge, close for profit. Options on XLG, maybe. Let's find out. I've used it for dollar cost averaging, though. I've never traded options on it. There's XLG. Yep. So you can trade options on it. So options are not great because you're going out to essentially monthly options. If I went out to June of 2026, it's not bad. Could I sell some puts on this? Pulls back to 52. We can get something in here. If I went to the expected move, it's not going to pay a lot. Honestly, it's probably not that awesome. But if I went like 54 by 52, if this fills, this is a pretty good trade. We're trading at $60 right now. This thing could fall 13 to 14% before I take any assignment on this thing. Only going out to, that's summer of next year. Do we have like a nasty rollover? Maybe. It's not going to set me back an arm and a leg, though. That's for sure. Let me see if this will fill. Let me see if I can take this trade. That gives me a $2 profit trap on top of a, maybe $120. I'll go 125 credit, see if this will fill. 125 not filling. Let's try 120. They got filled. Okay, I'm in. 120 on XLG. Let me put this. I'm going to do this for margin accounts. 9732. I mean, you can't fill me there and not fill me. Like, what the heck? So this is working. Let me see if I can get filled for. Wow. I mean, open interest is this may not be very liquid. I might have gotten very lucky on that fill. I'll try for $1.15. It's not filling. All right, I'm going to cancel. I just got really lucky then. So I've got it. I'm going to put this in my tracker. I'm not going to make that a group trade because I feel like it's not liquid enough to take it, but I'm going to add it in. That's kind of crazy. So my boy Doug will be happy to see that trade. So XLG, watch for dollar cost average plays, and then XLG June 18th of 2026. Buy the 54 put, sell the 52 put, $1.20 credit. Yep. So super low open interest, probably not super liquid. I'm saying that's a very generous fill. I mean, I can't even get another account filled on it, so I'm just going to hold off on that. What I will do on XLG though is I just have chart alarms set on these moving averages. So if we pull back to the 50-day, 100-day, or I'm sorry, 50 period, 100 period, 144, 200, I would not be opposed to owning shares. Now, if we cross over below the 200, I don't want to touch this thing. Okay, I would look left. I'd go further back and see on this side, start at the COVID low, go all the way out here. Maybe that's my larger support. So, if we have a nasty, nasty correction, I could pick this thing up easily from the bottoms. Nice part is this just going to be a constant rotation of the top companies in the world? Okay. All right. What do we have? 7 minutes left. We are up to 68.88. That would make my iron fly from this morning probably worthless if you didn't manage profit through the day. It is now at a near full loss. So as we near the close, update 3:54 p.m. Eastern Time, trading at 19.85 debit. Okay. And I can't emphasize enough, if you're trading near term, if you're trading for income, take responsibility of those trades, man. You've got up to $300 of profit today. Take it. You got $200 of profit today. Take it. Take $100 of profit. Take it. Okay. If you didn't, you're upside down. Now, granted, the risk was $105. So it's not like it's going to break the bank. But, I know traders that kind of rely on my alerts and signals. So I took $100 profit. I'm out. If you had the patience to hang in there a little bit longer, it offered $1.50, $2, $2.50 plus cents, almost $3 worth of profit today on a $1 risk. Okay. What moving average would you decide to sell puts or ratio spreads? Well, so I'm looking to the trade that I got filled on. So it's a line in the sand for me is the 200 moving average. If we are below this, there's two levels I watch. If we're below the 200 moving average, I don't really want to be holding price unless it's going to be something like this. If we go down to the 200 moving average and close back above it, then I'll take another stab at it with defined risk. Okay. But if we roll over through the 200 and we consolidate here and we roll over again, To me to buy it, I want to see bullish action. If we consolidate and we go below this, if we're below the 200 and we're below this 10-month moving average, I want to be in cash. I want to be in protected puts. I want to be waiting to buy. That is where I preserve my capital and dollar cost average into the discounts that the market will give us. And I'm not saying I'm not trading through that, but I'm not going super bullish because this market could have a 20% correction at really any point. And I know that seems crazy, like that's not going to happen. You have no idea. The fact that we have shrugged off literally everything this year, from when it actually mattered, the market shrugged it off, and now it's just like it doesn't matter what the news is, the market doesn't care. The market doesn't care. The market doesn't care. But we are seeing crazy overbought conditions with divergence. I've got to bring one thing up really quickly. I haven't used this workspace in a while because it's a bit noisy, but let me go into my harmonics and pivots workspace and just take a quick glance at my charts. All right, so here is my SPY. The zigzag has been looking for a top literally for a while on the weekly. We are at overbought conditions on the weekly with divergence on momentum. Again, this doesn't mean the market's going to have a top, but it means that I would not be surprised to see the market go sideways or correct a little bit with that disagreement between price and momentum. We're already at some pretty extreme overbought conditions on the 14 and 21 period RSI, or the 14 and 20 period RSI. I think it's 21 period. Yep, 14 and 21 period RSI. So that's pretty extreme. It's difficult to get to overbought conditions on a weekly chart, but we are there. Okay. If we go to the daily chart, we have been sitting here at RSI overbought for literally weeks since July. Okay. We are seeing higher highs in the markets and we are seeing disagreement in momentum. So the daily chart, the weekly chart, overbought conditions with divergence. It doesn't have to be like a reversal. It doesn't have to be a bear market. It just means a correction. Sideways is fine. Okay, let's go to the Qs. Daily chart, overbought conditions again, divergence. We're seeing higher highs in price, not higher highs in momentum. Go to the weekly chart. It's a little bit more apparent to me on the weekly. Okay, relative strength, overbought. We're at 70 plus on the 14 to 21 period RSI. Take a look at this. This is concerning. I was prepared to run the NASDAQ as long as this was making higher highs, and this was, it's agreeing with price, where price makes highs and this momentum oscillator makes highs. But now that we are seeing new highs in price and a pretty strong disagreement since August, the market might just kind of stabilize into the end of the year. But I just think like the next technical move to me, outside of like a melt up, which we've been seeing for months, but I'm talking about like the next big move that's going to have some technical force behind it, I think is going to be a correction. So, we can shrug off all this bad news and this can stay overbought for a while, but I'm telling you that the indicators are pointing towards be cautiously bullish, because all it takes is like one nasty candle to take away and put in like just the fear of God in these bullish markets. So I don't want that to happen. It's much easier to make money in a bull market, right? What I want to do is make sure that I'm not giving back a bunch of profits in a bear market, or at least, if we have a healthy correction of 5, 10, 15%, I don't want to give much back. So, and also, we need to know this, the market doesn't move in a straight line. So even if the market was going to correct, okay, if the market corrects, we're not going to go down in a straight line. Okay. If the market corrects, it starts with something like maybe a big candle. Then we have a dead cat bounce or a pause, and it goes like bear flag style. Okay. If we get to these major support levels, does it start to show that it can bounce? Well, just like that, you can shrug off a correction by having a lot of dynamic support. I think the issue that I have right now is that the market is literally sticking to like the most aggressive bullish trends. The 9 period moving average, the 5 period moving average, the 10 period moving average, the 15 to 20 period moving averages. That's what's been tested. We haven't hit a 50 period moving average since May. Okay. So we'll see. But today, dust settles. Market makers did keep things within the market maker move. Open today at 11. closed at 92. That's a, 20-point move? From 11 to 92 is about a 20-point move. Plus or minus was 30 on the day. Market makers did their job. Even despite all the craziness, still kept it into daily profit play was perfect. We didn't take the trade because we knew we had to sit on the trade all day. It would have been a stressful post-Fed move that then just spent the rest of the time working back up to profit. But anyway, good stuff. I'm glad we won the day. Winner for double ups. Happy with that. And we'll keep plugging away. So I will let you go for today. Tomorrow, I have a master class on my double ups course. And tomorrow, I'm going to be talking more about practical options. And I'm still going to put a video together for my Pinch Point members and my Project Options Edge members going into the end of the week. Okay, so tomorrow, daily profit play, 9 a.m. Eastern time. Everyone's welcome to join me. This session is free, or the session is free every single day. Here is the link if you want to join my Telegram. Here's my Telegram. Chris Pulver Telegram. There you go. And we'll be live at 9 a.m. Eastern time. If you would like to join, I've got a direct link if you want to jump in to my daily profit plan. Daily profit plan, weekdays, 9 a.m. Eastern time. There you go. So a couple links there to share. All right. I will let you go for today. Come back to it tomorrow. Mag 7 earnings. What is it today? Meta, Microsoft, and Google. Chipotle, a couple others. But those are the big ones for the Mag 7. We'll see where it takes price. Watch futures. Keep an eye on our gamma levels. We're back into positive gamma. It was defended here at the lows today. It just shows the power and stability of the 0DT stuff. We see it every day. It's crazy. Okay, I'm looking at it right now. Alphabet up after hours 1.98%. So 274 to 282. This is a $1 trillion company up after hours. Probably not a big surprise. If we have solid earnings across the board, Meta, Microsoft, and Google, then the markets are probably going to be up tomorrow. So all this was today was noise. We'll see what happens tomorrow. All right. Come back to join me tomorrow morning, 9 a.m. Eastern time, daily profit play.